Hello, trading is closed on May 29th, 2020. Let's go over our calls. First of all, we hit a target for May 27th of 3003.95. These are not only targets, they're also support areas, support resistance. So you can see that we got support right under the target. So we can cross that one off the list. Now we said a few things. We said pattern had the early low. We got that. Typically it's a rally day with a final hour high. We got that. And dropping early implies further weakness in future days. Well, that's an early drop, and typically it leads to more weakness. So that's negative. But here we gapped down, hit lower lows, closed over all of them, plus overall the intervening highs, and that's a positive. So the most likely thing is we're going to gap and promptly trade outside the day's range, and we'll make the call in just a minute. During the day, MEJT said ultimately lower prices would print. They did. When they printed, the system said they were false and they wouldn't stick. We retraced into the area marked by the yellow lines. In the afternoon, it said this drop would retrace. The area between the white lines said this one would also retrace, and that happened too. So that's all played out. We got two of DeMark's sell signals. I wish these had worked more reliably, but I can tell you what the signals are without necessarily acting on them. We have a 913.9 sequential cell, and we have a combo cell in green. Here's the 913.9, and they're both on the same day. That's called alignment, and it's a negative formation. If you're going to collapse, you want to undercut this line pretty quickly. I think it's way too far away, but if you undercut this line, which is a 2863.70 within 3 days, it would imply it would be a correction of some size. So we're also at this TDST line, a bar over the line is resistance. Here's your upper Bollinger Band, that's resistance on the daily chart. You're also at TDST resistance on the weekly chart. We're also making countdown bar number 9. Here's 1, 2, 3, 4, 5, 6, 7, 8. 9 is usually a resistance area. So it doesn't mean resistance has to hold, but at least you're at resistance. Now this is one of my patterns called the diamond on stilts. This is an inverted diamond on stilts. Here's your stilt, here's your stilt, here's a diamond. You don't know which of these points to take, but you take the height of the diamond. You can measure from here or from here. You take a Fibonacci ratio and you get a target right here. So that's a candidate for the end of this rally. And if so, there should be a return down here. You've got support resistance. This is support right under the low of the stilt. If you gap under this, if we gap down, undercut this, then support becomes resistance. Of course, that's quite a ways down. So let's make the case for that happening. We're not certain of the count, but I think this pattern we showed yesterday still is intact. And the only thing we have to see is if there's a valid count on this drop. We'll go to a smaller time frame. It's easy to count this as 5 waves down. You can see a fib ratio between wave 1 and wave 5, 1.618 of wave 1. And if so, we then have an ABC up. B has an ABC with C equal to twice A. And in magenta, you can take wave C, and you can see it's twice wave A. So we have a great Fibonacci argument for an impulse down, followed by a completed corrective wave up. And if that's true, we should be in a third wave down, that's not the one I wanted. So if that's the right count, eventually I'll find the one I want. If that's the third wave down, and this is 1, 2, 3, 4, 5, you have another impulse down, which could be comparable in magnitude to this one, if that's the right count. All you need to do is to gap under this low. Monday's pattern has the early high. Doesn't mean you won't gap down first. Your mixed signal is bullish. We gap down, hit a lower low, and closed over all the lows. That's positive, but if we undercut, if we gap down sharply, that's positivity goes away. It's quite negative that the sharp rally came in response to a news announcement, the president's speech. These moves typically reverse quickly and completely. The strong rally late on Friday is unlikely to represent institutional activity, and the huge rally after hours right before the weekend, if it were to new all-time highs or new highs of this rally leg, that would be one thing. But it's not, and that suggests it's not people piling on. It suggests it's short covering rather than the accumulation of shares. And if that's true, we should gap down sharply at Monday's open, undercut today's low, and soon thereafter continue dropping. We should know by the open if that scenario is in play, and if it is, we have our plan, and if not, then I'm going to pass on making a call. Our pattern with the early high, everything fits if we gap down smartly and undercut today's low, and if we don't, then I'm going to have to wait to see what I'm going to do, and that's today's call.